Here on the Colour of Country Life, always good to catch up with Rabobank's Dennis Voznesenski. How are you, Dennis?
I'm pretty good, Ricky. How are you doing?
Wonderful, thank you. It's always good on a Friday to have a chat, but we always enjoy talking about what's happening in the markets for our grain producers and canola and other oilseed producers. Dennis, just broadly, what are we seeing on those markets?
So if we go first globally, there has been a decline overseas, and I see two main factors contributing to it. One is that there's a lot of optimism over what's happening in Ukraine in terms, not the war ending because that's still ongoing, but there's a lot of market optimism about, maybe they can get grains and oilseeds out of the country. Me personally, I'm still kind of pessimistic that two countries that are at war with each other can have something sustained in terms of allowing these grains and oilseeds to flow out. Also, another challenge they're going to have to deal with is the current ships that are leaving were previously insured before the war, so they've been stuck in Ukrainian waters, and now they're leaving with that grain. Whereas if you want to get new ships into Ukraine, you're going to have someone who's willing to insure the ships. And once you add that additional cost, you also have to keep in mind that it has to still be profitable or viable economically to move that grain. So there's still a lot of concerns there, but right now we are starting to see one or two ships start to trickle out of there, and that has dampened pricing. The other one, and I think this is equally as big, if not bigger, is that, yes, the world is tight on grains and there's not enough around, but right now we have harvest in the Northern Hemisphere, and that's what we've been saying this year, that despite the fact that there are issues around the world, and it may be drier in some places, you had this issue with Ukraine. There's still harvest coming online now in Russia, who's still exporting, in Europe, in North America, and then once we move through the U.S. harvest, then we have Canadian harvest as well. So the two main factors that have been dampening prices for both grains and oilseeds, and that's come down here, impacted here in Australia as well, because we export, our prices are dependent on what's happening overseas. And hence, if their prices decline, so do ours.
Yeah, have we seen anything on the futures market about that sort of return of optimism that we might be seeing a bit better freight movement, not just out of Ukraine, but generally around the world?
Well, we have seen reduced bulk freight rates compared to what we saw during COVID and even during from the beginning of this year. So that has improved, but I won't say that it's gone back to normal. Same on the container side of things. It's better than it was, but until next year, we don't expect there to be a full resolve. Even next year, it's unlikely to be fully resolved. So we go back to pre-COVID levels in terms of not port congestion, but availability of containers. It's going to take a little bit of time. And if you look at what's happening in Australia, I mean, you look at Western Australia, you look at South Australia, the East Coast, there's still a lot of pulses lying around on farm because there's just an issue with getting the containers out of the country or getting enough containers in the first place.
Yeah, I wouldn't be suggesting for a moment we're back to normal, but certainly it does seem things are flowing a little better than they were. Are we seeing on the demand side, I guess, as economies reopen, tourism happens again, people are dining out again, not back to where we were pre-pandemic, but are we seeing that demand side also helping with price?
The demand side is helping, and more importantly, it has been helping. But right now, we're starting to see, because of all this inflation, central banks all around the world start to raise interest rates. And once the central bank raises interest rates, commercial banks have to raise it as well because that's where they get their funding. And when you have higher interest rates, it reduces disposable income of consumers, it slows the economy, it raises unemployment, and that would be a negative going against the kind of post-COVID sugar rush of economic growth.
And what we've seen, you mentioned first of all about global markets, we usually see Australian prices, lately we've seen them largely insulated from radical movements on the global markets. Are we still seeing that here?
We've been following them more closely as of probably since mid-June. We've been following overseas markets a lot closer. One concern I would have, and I think it's important to keep in mind for everyone, so if you look at the East Coast, there's a substantial amount of grain still on farm. There's a substantial amount of grain still in bulk handling sites, still a lot at ports because they couldn't get it all out on time. Because there's just been so much. And my concern is what happens when we get the harvest. And if we have another large crop, it's not looking like a record crop at the moment, but it's still looking like a very healthy sized crop. Where are we going to put all that? And even if prices overseas skyrocket again, for whatever reason, the local prices around harvest, or maybe even in the month leading up to harvest, will struggle to keep up because we'll just have so much grain and not enough ability to get it out of the country. So we'll just be sticking around here for a while.
Well, we've been sticking around on the wool market, watching during the recess period at the moment. That's a market where our mail is that we could well see a significant drop in the market, not only because of a lot of supply waiting for the markets to reopen, but because greasy wool and the foot and mouth disease concerns, rational or otherwise, there's an expectation we'll see a drop in the first round of trading.
Yeah, we could see a drop. My forecasts have been as follows. So for 2022, there's still this kind of, and I mentioned it before, this sugar rush of demand. There's people heading back to offices, something we've talked a lot about on this program. In the U.S., they're even making it compulsory in some companies now to head back to offices permanently, not flexible, but permanently to go back to the office. And we're starting to see that reflected in wool and suit imports. So if we look at the U.S., they're only 12% below pre-pandemic levels. That was in May. That was the latest May data for imports into the U.S., which is a massive improvement from peak pandemic when it was 80% below pre-pandemic levels. So in 2022, there's this sugar rush of demand recovery, but my concerns are in 2023 that we have inflation, we have rising interest rates, possible unemployment issues, and what all those three factors mean is that there's going to be less disposable income for consumers to spend, especially on things that are made from wool because they're more expensive. So if you have high inflation, especially food price inflation, there's less money for consumers to spend on other things. If you have high interest rates, that means higher mortgage rates, and that means you're going to have, again, as a consumer, less money to spend on things, again, like apparel. So 2022, I'm still positive on that, but moving into 2023, and we're not that far away, there are some stormy clouds gathering on the horizon.
All right, well, plenty to watch, especially when wool markets reopen this coming week. Thanks, Dennis Voznesenski from Rabobank, for joining us with the latest on a whole range of commodities. It's much appreciated.
No, thanks, Ricky. And if anyone's heading over to the Cleve Field Days in South Australia next week, be sure to catch me there.
Great mention of the Field Days. That's good. Get over to those and you'll catch Dennis. Thanks again, Dennis.
All right, see you later, Ricky.